The Tax Resolution Institute presents Cost Segregation Overview and Software Tools, presented by Gian Pazzia of KBKG.
Hi, I'm Gian Pazzia, and today I'm going to give an overview on cost segregation. I'm also going to talk about some new cutting-edge cost segregation software tools. Just to give you a little background about KBKG, we've been established since 1999 with offices across the United States from Los Angeles to New York City. We provide turnkey tax solutions to CPAs and businesses of all sizes. We've literally performed thousands of different types of tax projects, resulting in hundreds of millions of dollars of tax benefits to our clients. And we're not a traditional CPA firm. In fact, we don't do compliance work. Our team is a diverse mix of tax specialists, attorneys, energy consultants, and engineers from various disciplines. And it's really this combination of talent that allows us to be the very best at what we do. And I'm proud to say that we're a preferred provider for thousands of CPAs across the country. A little bit more about my background. Again, my name is Gian Pazzia, and I'm a principal at KBKG, and my background is in civil engineering. I'm also a certified cost segregation specialist through the American Society of Cost Segregation Professionals. I'm a past president of the ASCSP, and I've been involved in their board of directors since 2007. I've served as an expert witness on cost segregation matters before the IRS, and before KBKG, I've been with two of the big four CPA firms. So let's talk about cost segregation, what it is, and why people want to do it. So the primary goal of a cost segregation study is to look at real estate property and identify all the property-related component costs that should be depreciated faster than the building structure itself. Typically, these components will have a tax life of 5, 7, or 15 years for depreciation purposes. So why do we want to do this? We want to take our tax deductions as early as possible to increase cash flow. By doing that, it creates a time value of money benefit by having that cash flow now rather than later. There's a secondary benefit of doing a cost segregation study, and that's to not only identify the short life property in a building, but also to establish the depreciable tax value for each major building component that's likely to be replaced in the near future. Some examples of this would include a roof, windows, doors, bathroom fixtures, HVAC, and so on. Tax preparers need this information to claim retirement loss or partial disposition deductions for the remaining depreciation left on each component. So cost segregation's been around for almost 50 years. It's become one of the most common tax strategies and planning tools for tax preparers that deal with anyone that owns real estate. When a property is purchased in the current tax year, you simply get the cost segregation study and you can report the value of each component on your depreciation schedule with its appropriate tax life. This will maximize the benefits of a cost segregation study. But one of the most interesting things about cost segregation is that you don't have to apply the cost segregation results in the year you buy the building. The IRS allows you to apply a cost segregation study anytime after a building is originally purchased. And it doesn't require any amending of tax returns. So just think about this. As a tax preparer, there's not many opportunities to actually time when you want to use deductions. If your client has a situation where they are projecting a taxable event in the near future, it might be more beneficial to wait to use those deductions in the year of that taxable event. Again, it doesn't require any amending of tax returns, but what does need to happen is an additional form. That's the Form 3115. It's called the Change of Accounting Method form. And it allows you to claim any missed depreciation deductions in the year you apply the cost segregation. Now, without cost segregation software, it would typically only make sense to hire a certified cost segregation engineer for buildings with a tax basis of over $750,000 of building value. The reason is because it's expensive to hire a cost segregation engineer. Typically, for buildings over $1 million, it's going to cost between $5,000 and $15,000 to hire an engineer. What I'm going to show you today is that you can actually apply and generate cost segregation reports yourself without the need to hire a third-party engineer for much smaller buildings. The residential cost segregator software was prepared and designed for tax preparers. It allows you to generate a cost segregation report on smaller residential properties without the need to hire a third-party engineer. It relies on information provided by the building owner and empirical construction cost data and proprietary algorithms that have been written by the KBKG cost segregation engineering team. It'll provide a detailed cost breakdown for the property categorized by tax life that can be used for income tax depreciation purposes. Most reports that are generating using the residential cost segregator will result in greater than $20,000 of additional tax deductions in the first 5 years. It allows you to white label these reports so you can offer this service as your own. The cost is $399 per report, but it allows you to charge your client for the value and time that you're spending to deliver this service. Tax preparers can charge anywhere from $1,000 to $2,000 to provide these reports to their clients and implement them on the tax returns. The attached slide shows what kind of benefits you could expect from the residential cost segregator depending on the size and type of property. In this first example, with a rental duplex that was purchased for maybe $250,000 with a depreciable building value of $200,000 that was purchased in 2011, you could expect additional year one deductions of $18,000. And as the tax basis gets larger, the benefits get larger as well. We'll see there at the bottom a 6-unit apartment complex with a depreciable tax basis of $500,000 purchased in the current year generates additional tax deductions in the first 5 years of $45,000. The benefits shown above only account for the reclassifications to short life property within the buildings. These numbers do not include the additional benefits that you would derive from future partial disposition deductions. The residential cost segregator works for residential properties up to 6 units with a depreciable tax basis of $500,000 or less. That does not include the value of land. So if you bought a building for $700,000 and the land was worth $200,000, this software would work as long as it's a residential property. It also works for condos, townhomes, rental homes, and of course any apartment with as many as 6 units. The software is very simple. It only takes 3 easy steps that'll take generally less than 15 minutes of the tax preparer's time and less than 15 minutes of your client's time. Step 1 is to estimate the potential tax savings for your client. Once they agree to move forward with the cost segregation study, you can initiate a new project and send your client an invitation link to fill out a survey online about their property. Once they're done, you'll get notified. You can review that information and let the software generate a cost segregation report. And it's that simple. For properties placed in service in prior tax years, you'll need to file a Form 3115 and calculate the missed depreciation deductions. And for that process, you can use our 481A adjustment calculator that is online as well. Now let's try a live demo. Your first step is to create a free account on kbkgsolutions.com. Once you register, you'll go into our dashboard, which looks like this. There's a number of tools here, and the one we're going to start with is the residential cost segregator. So go ahead and click on the residential cost segregator button, and it'll bring up a window that looks like this. Now I said step one is to estimate the tax savings because you don't want to go ahead and generate a report before your client agrees to move forward with the study. So there's a button that says estimate tax savings, and all you need to do is put in the tax basis. So if you're looking at a depreciation schedule and you see a residential rental home purchased with a tax basis of $300,000 and placed in service date of July 1st, 2012. Then you click Preview Tax Savings, and you get a quick estimate that you can show your client to let them know how much they're going to save. In this case, we're estimating that the savings are going to be between $21,000 and $32,000 of extra deductions in the first year alone. Now, once your client has agreed to move forward with the study, you can come back into the residential cost segregator and start a new project. To do that, you simply click New Report. Now, for the purpose of this demonstration, I'm going to click on one of the existing reports that I already started. If you know the address of the building and you're looking at the depreciation schedule, and it says $300,000 is the tax basis, we'll go ahead and enter that. Since this is information we know, maybe we know the address of the facility, we can go ahead and type that in. And we know the placed in service date. We can stop there if we don't know any more information of the property and send the invitation link to our client. Whoops. First, let me hit Save and Continue and send that invitation link. Now, your client will get an email with a link giving them instructions on what to do. This screen shows what your client will see, which has some limited functionality and doesn't have all the screens that you would see as a tax preparer. You'll see that it has the information we just input, the $300,000 of basis. It has the place in service date we just input. And now the client simply answers the rest of the questions about their building. So let's say it's a residential duplex with 2 stories, 2,500 square feet on a 4,500 square foot lot with a stucco finish, no basement. And then the owner gets to decide what the construction quality is. So if it's an economy home or a high-end home, we're just going to stick with average for our demonstration. Next, they select the physical condition. So if it needed updating, or maybe it's in excellent condition, again, we'll just select average for the purpose of this demonstration. Then they move to the Interiors tab. On this tab, you select the total number of bedrooms. So if each unit had 3 bedrooms, there would be 6 total bedrooms. We'll say there's 4 total bathrooms. We'll say that there's fire sprinklers in the home. And then the owner selects the flooring type in each room. So if the kitchens maybe had ceramic tiles, and maybe the living room had a wood floor, we'll assume that the bedrooms have carpeting in them. We move down to the interior section where you select whether you have air conditioning and heating or both. And in this case, we'll say there's both. And then you select the type of system you have, whether it's in-wall units or a central system and so on. In my example, we'll say there's 8 total ceiling fans, and the windows have horizontal blinds in front of them. Finally, on this tab, you select the appliances that came with the rental property when you acquired it. Hit Save and Continue and move to the exterior section. Here we select whether there's a garage, and if so, whether it's attached or detached. In my case, let's say there's an attached garage, and there is 2 parking spaces in that garage. We'll say in the driveway there's 4 additional parking spaces. We'll check the box for some landscaping and a patio on site. The last thing that the building owner can do is enter in the lineal footage of any walls or fences around the site. For my example, I'll say there's a 100 lineal foot fence surrounding the site. And once they're done with that, they hit Save and Continue, and that brings them to our review screen, which is simply a screen that shows all the inputs for all the questions they just answered and gives them one last chance to review before they submit the information back to you as the tax preparer. So I'm going to go ahead, click Confirm and Submit. It says that it has successfully been sent. You will get an email now telling you that the information is ready and for you to log back into KBKG Solutions. So let's go back to our KBKG Solutions dashboard. Go ahead and open up the residential cost segregator. And you'll see that our property here, Demo Lane in Tucson, it shows that the status is ready for review. So this allows you to go in there and look at all the information that your client input. You'll see all the inputs that your client has. And there's one additional tab that the tax preparers can see that the building owners don't see, and that's the Tax Benefits tab. This allows you to modify what the combined federal and state tax rate is, what return on investment factor you want to use to project the tax savings, and also decide which tax year you'll be using in applying the cost segregation report for. Again, you have one last chance to review all the information on our Review tab. And once you're ready, you would click the Calculate button to generate your report. Now, everything I've done up to this point is absolutely free to do. You don't need to pay anything or put any credit card information for everything up until this point. But once you are ready to generate a report, you'll need to buy report credits. I currently have report credits, but if I didn't, it would send you to our shopping cart where you can pay for the report before you generate it. I'm going to go ahead and proceed with the calculations. And as you can see, it generated a summary page, and I'm going to walk you through this report. But this summary page is something that you can show your client to demonstrate how much they've saved. In this case, we've generated $34,000 of additional tax deductions in the first year alone. It also shows you what the separation numbers were or how it was allocated in this pie chart, and shows you the increased cash flow by year. But what you're really interested in is the building component cost breakdown, and that's our cost segregation results schedule. As you can see, we have a complete breakdown of the building by major building category that reconciles to the $300,000 number that we put into the software from the depreciation schedule. Each of these numbers is customized based on what the building owner had input into that building survey. There are certain numbers on here that would not show up, like carpeting, if we didn't select that there was carpeting in the bedrooms. The values that are being shown, again, are being customized and generated based on the physical attributes of the buildings and the inputs that the owner has selected. The last page of the report is simply a listing of all the inputs and the physical characteristics that have been collected on the property. And that's it. You're done. You can save this as a PDF. You can save a copy for your file. You can send a copy to your client. You can also export these results into Microsoft Excel in a format that is ready to be uploaded into most tax depreciation softwares. For buildings placed in service in prior tax years, like this one is, you'll need to file a Form 3115 and calculate the missed depreciation, which is also known as the Section 481A adjustment. To do that, you can click the 481 adjustment button on our tab here, and the cost segregation results for your property are going to be immediately imported into our 481A calculation software. You can see the tax basis of the original asset on the depreciation schedule, the placed in service date, and then each component value and how it was reclassified or classified for the purposes of our cost segregation study. Each one of these inputs is customizable, so if you wanted to use a mid-quarter convention on the personal property, you have the ability to change the convention and also apply bonus depreciation if it was a new property. Actually, one quick step is you need to, let's go ahead and put in sample. Let's say that the tax year in is December 31st, 2016. And you would enter in the accumulated depreciation from your depreciation schedule for the original building. So I'm going to go ahead and just make up a number here of $15,000. And then we would go ahead and hit the calculate button. So as you can see, we have a calculation here of the federal 481A adjustment as well as the federal AMT 481A adjustment. And it does it by each individual building component, which is what the IRS requires. These schedules can be attached to the Form 3115 to support your numbers. In fact, these schedules are required under the instructions of the Form 3115. There's our calculation schedules. This can be exported into Microsoft Excel or into PDF. This 481A calculator is also available to do 481A calculations for any type of property using our online tools. The next tool I want to talk about is our partial disposition calculator. And what this does is it allows you to determine the value of any component in any type of building that's been removed from the building without the need for a cost segregation study. This is especially important now that the tangible property regulations allow you to take a deduction on any components removed from a building. Our calculator takes less than 5 minutes, and it's 100% supportable if it's ever reviewed by the IRS. The calculator considers the condition of the respective component at the time it was acquired, and this is accomplished by considering the component's normal life, quality, and age. Now let's try the demo. So once you log into the KBKG solution site, you would select on the partial disposition calculator under the menu. Here, you'll see our input screen. So let's walk through a case study. Let's say you have a client that replaced their windows in their apartment building this year, and they spent $200,000 to replace those windows. We'll say that the date of the replacement is 6/1/2016. And we know that the building, the apartment building, was originally purchased and had a basis for depreciation of $3.5 million, and that was purchased back in 2011. You can put some optional information in here. We could say that the building was originally constructed in 1989. From the depreciation schedule, we enter in the accumulated depreciation of the building through today. And again, I'm going to make up a number here, and I'm going to use $275,000 of accumulated depreciation. What the software is doing is it's looking at the producer price index at the time the building was acquired and at the time that the asset or component is being replaced. So you can see the producer price index values showing up in our software. The next step is to select the type of component that's being replaced. So once you start typing, you'll see various components come up. Here we're going to say that aluminum windows are being replaced. And you'll see that the normal life of an aluminum window is 20 years. Our database is filled with hundreds of different types of building components and provides what the normal life of those components would be. So if for example, we're replacing an HVAC unit, it would say that a central air conditioning system would last 14 years. So that information is important to this calculation. Let me go back to Windows, select aluminum. We have a 20-year life on aluminum windows. The software now looks at the length of time that the asset was used prior to its retirement. So we know that the windows were purchased with the building in 2010 and replaced in 2016. So that's about 5.5 years of use prior to being disposed. That means that the effective age of those windows in 2010, when it was acquired, was 15 years old. They lasted 5 more years to the end of their useful life of 20 years. With that information, we can go ahead and calculate a component value for those windows in the building as of its 2010 purchase date. Our final value is that the windows are worth $76,844. What our software does is it discounts the cost of the new windows, which were purchased for $200,000 in the current tax year, using the producer price index to figure out what the cost of brand new windows would have been in 2010. That number is $192,000 when we discount back to 2010. But we know that in 2010, those windows were not brand new. In fact, they needed to be replaced just 5 years later. So in order to account for the condition of the component at the time it was acquired, we have to come up with what we call our condition factor. And that's where the normal life and effective age of the component must be determined. That's what our software does for you. Once we apply our 40% condition factor, we come up with a final value of $76,844. The software also calculates the accumulated depreciation on that component and gives you the regular federal tax deduction of $70,806 that you can take on the current tax return. This can be exported to PDF and saved for your files. And again, this is 100% supportable if it's ever audited by the IRS. The last thing I want to demonstrate that can be found on the KBKG website is our cost segregation savings calculator. To access it, go to the software menu and select the cost segregation savings calculator. This is free to use. So if you're in front of your client and you know that they bought a building and you're trying to figure out roughly how much the tax benefits would be for doing a cost segregation study, you can get that estimate instantly without having to call anybody to run through projections. So let me walk you through how our calculator works. You can put in a name of the property. You can put in the purchase price less land. So let's say this is a $5 million building. Then you select whether it's a freestanding building or a leasehold improvement. And then we have a list of all the different types of buildings. So if this was, we'll say, a general office building, and we know that it was acquired maybe in 2012, and our current tax year is 2016. We have the option to change the return on investment factor. We have the option to change the federal tax rate and select the appropriate state that it's in. It asks you if this was an acquired property or was newly constructed. And so if we select newly constructed, you have the option to apply bonus depreciation if it's applicable. So I'm going to go ahead and do that. Select 50% bonus, and then hit the calculate button. So there you go. You can instantly get an estimate for how much a cost segregation study could generate. In our estimate here, it says that they could expect between $584,000 and $759,000 of additional deductions in the first year if they engage in a cost segregation study. The calculator also gives you all the detail by year of how your depreciation deductions are going to be affected throughout the life of the property. This can be exported to PDF and saved or sent to your client. Well, I hope you enjoyed our demonstration on our various tax tools and products. I hope you can find them useful and bring value to your clients and generate revenue for your firm. If you have any questions, my contact information is on the screen. I'm happy to help. With that said, thank you for your time, and I hope to hear from you soon.
Thank you for watching. Please look for more programs from the Tax Resolution Institute.